Sintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader. I'm here with your Cabot Weekly Review, recording this late Friday morning on June 27th. So we're almost through with the first half of the year. And just kind of before I start, which I'm actually on the Cabot podcast later today, but bigger picture, just stepping back as we're sort of exiting the first half of the year, to me it looks like this whole really first half, even going back to December, has been almost like one big setup, where you've had some topping, obviously a crash, bottoming, blast off, and then the last month we've had a lot of nothing really, despite some good news like the U.S.-China trade truce. Remember, that was kind of tense. We had rising interest rates for a time, treasury rates, and then recently we had the Middle East uncertainty. But through it all, the market and most leaders have been pretty tight. And the good news is this week, we came in thinking like, maybe we get hit because U.S. bombing, Iran, and all this stuff. But it turns out it's been a great week for the market. The indexes are stretched. The big cap indexes are stretching, pretty much testing all-time highs. And the rest of the market is sort of stretching and just nosing out above sort of their highs for the last 5 weeks. And more important to me is a lot of individual stocks are doing the same. Now, it's not 1999 out there. Not that you want to wait for, 500 stocks to hit new highs. By that point, you're probably closer to a top than a bottom or anything like that. But, it's not like there's just so many stocks and just all this stuff going on, at least institutional quality names. But at the same time, it's certainly another step in the right direction. In Cabot Growth Investors model portfolio, we had been stair-stepping in very steadily for 5 weeks, 6 weeks. The last couple of weeks, we didn't do too much, did a little bit of nibbling. But with the action this week, we're putting another slug of money to work. We have about 19% cash. Frankly, the reason we have that much cash is we have 10 stocks, but we have some smaller positions, and usually we start small and average up if they work. So if they work, hopefully we'll be fully invested soon. If not, maybe we'll kick those out and get some others in there. But either way, I do think it's another step in the right direction. We are seeing some fresher breakouts. We're seeing some stocks that have been declared leaders kind of form secondary entry points too. So it's all to the good. We'll see how it goes from here. Obviously, earnings season's coming up, and who knows? Maybe the inflation picks up or the market sells off strongly next week. Then it might have a different look to it. But just going with the evidence here as we leave the first half of the year, I'm very, very optimistic. Bigger picture, looking out many months, and for the here and now, it is looking like the buyers are starting to flex their muscles and more stocks are joining the party. Okay, let's hop into the charts. As always, I'm using a program called Market Surge. It's a product of Investors Business Daily. You can learn more at marketsurge.com. So the NASDAQ and the S&P 500 are leading. The big caps look better than the rest of the market, which has kind of been the case for years at this point. So it is what it is. But you can just see the NASDAQ really just tagged the 25-day line here. This is the 25-day simple moving average. And now it's stretched to new highs. Now, I'm not trying to throw cold water on it. I will say that after a big comeback like we've seen, usually I won't say usually, but sometimes it's not unusual when you get new highs, all of a sudden the headlines say S&P 500 new highs, market hits new highs, news is good, that you kind of then get a pullback. And I'm not saying a pullback of 10% in the market. I just mean some sort of shake the tree event. So it's not, it's not like the pristine entry point, but nevertheless, what I've been sitting here saying for many weeks is like, it's good, but we haven't gone much of anywhere for a month. Let's see if we can accelerate higher, and let's see if individual stocks can too, and we're seeing that. So it's all to the good. I'm just saying, I wouldn't go, if you're, for some reason, if you were 80% in cash, I wouldn't put it all to work today type thing. But I do think, obviously, the action is a positive. Okay, S&P 500, same sort of thing, 25-day line test. Not a lot of progress for about 4 or 5 weeks. You see that in a lot of stocks. And now, launching to the upside. And most importantly to me is just, like I keep saying, there's a lot of daylight here. We're using for the intermediate term trend down to the 50-day line. Again, like I've said before, if if the S&P is down here next week, technically still positive, but that would be kind of abnormal. But obviously so far so good. There's plenty of breathing room for things to pull in. Okay, just cycling through some of the other indexes. It's a pretty similar picture. Again, not as strong as the big cap, but this is like the New York Composite. It's strong in the sense of new highs, and there's plenty of daylight. I wouldn't say it's been as dramatic here lately. And the small and mid caps are lagging, but even these are basically testing the highs and maybe nosing above the highs of the last 5 or 6 weeks. Okay, so again, I'm not trying to throw cold water on it. This is the mid caps. But if we came in next week and it's right back in here, that would be a little bit of a like, hey, was that a bull trap? Was that a suck in phase? Does that mean, I don't think that means we're going down here, but does that mean like, oh, now we need some more time, we got to wait for earnings season, that sort of thing. So it's just something to be aware of. You can never really declare victory in the market because things can always change next week or tomorrow, but so far so good. Okay. Pretty much the same picture for the growth stuff. This is the IPO fund, nosing out to new highs again. Like I said, it comes down here next week. Doesn't look as good, but so far so good on that. The IBD, FFTY, the IBD 50 fund sort of thing. The equal weight NASDAQ 100. Okay. It all looks pretty good. It all looks pretty much in gear on an intermediate term basis, not, longer term, things aren't hitting all-time highs, but on an intermediate term basis, it's pretty much in gear. Okay. I'm still intrigued just looking at some other, before we get into individual stocks. This is IAI. I mentioned this last week, I think, which is the broker-dealer index. And this does have some like Coinbase and stuff, which is hot, but it's mostly, Goldman. Okay, this is Goldman Sachs. I mean, that looks pretty strong. Again, I'm not saying go out and buy Goldman Sachs here, but that's certainly a sign of strength and probably a good sign for the overall market. State Street Bank, I'm just bringing this up as a chart in the group that looks great. JP Morgan, of course, is, hitting new highs here. So, the financials, I'm not a big, like, as the financials go, so go the market, because that's not quite true. I'd rather watch the leaders, but I do think the broker-dealer and some of these, quote, what I call bull market stocks are looking good. And that, those are usually not trafficked in by just a small investor. Usually those are big investors playing Goldman Sachs and stuff like that. And the fact that their perception is increasing is a good sign, okay? I'll just mention XLP real quick. I always like to keep an eye on the defensive stocks. And they did pop for a couple days, but then right back down. I don't get too close to it, but obviously this is XLP. Obviously it's been declining here while the market's advancing, which is classic. There's no rush or desire for defensive stocks, even with the uncertainties, even with the trade deals that are still out there, supposedly being negotiated and all this stuff. Okay. Last but not least, sort of before we get into stocks, I do find it interesting. Well, let me look at this is a 30-year note right here. And this was that sort of, not a panic, but there was a worry phase when we spiked above 5% in the 30-year note in May. It was around Memorial Day, I think a little bit before that. And the 30-year note is still, if you're looking at this, it tried to break out, it failed, which isn't good. I wouldn't say it's fallen apart, but it has been trickling lower below the 50-day line. And like we said at the time, that was the worst looking one. The 10-year note and the 5-year, the other notes and bonds look much better. And this is the 10-year, which is kind of the benchmark. And you've just been kind of slipping and sliding here now for a few weeks. Maybe this is an area of support and rates, treasury rates tend to rally from here. We'll see how it goes. But I do find it interesting here. And with all the talk of the Middle East, I'm not a big person about trying to find a reason for everything because I just go crazy that way. But with that said, with all the talk about the Middle East recently, I do find it interesting. Now we've had a little bit, hey, maybe the Fed will cut rates in July. Probably not, but it's actually coming on the radar. And it's starting to sound like September is, more and more of I don't want to say a sure thing, but looking likely. So all of a sudden, if the Fed, which no one's talking about, but if the Fed starts easing again, it could be a good thing. And maybe the Treasury market is picking up on that. So I do find that as a secondary positive, basically. Okay. Going into individual stocks, I do want to mention, I'm not saying, again, I wouldn't cannonball into the pool right here per se. Hopefully you've been following the evidence step by step here the last couple of months, really all of the first half of this year with us. But, this is SSO, or there's some leverage long index funds. Some of them are risky. Some of them are sector funds, which I don't get involved with. But some of these things just move twice major indexes, twice the NASDAQ 100, twice the S&P 500. They've been around for years. They're very liquid. And if this is early on, when I say early on in the bigger picture, meaning, this is a major low and we're going to rally for a year, not straight up, but generally speaking, sometimes just having money in the market can get you a foothold, in the bull market and make some good money over time. So just something to consider. Obviously, that's not how I've made a career, is just picking index funds, but I do really like the look of the big picture. I will say there's a lot of mega cap stocks, which is not that's not really my main cup of tea. But I will just say there has been some unusual strength. This is Oracle, which I think we mentioned last week, which has been as kind of a, it's just a, single digit grower for a year. It's fine. It's a nice company, but nothing dynamic in the market in terms of outperformance. But this volume clue after earnings and their cloud business and the cloud infrastructure, which is playing into AI, could be a game changer. So you had this kind of almost flagpole here, and now the stock's consolidating. NVIDIA, which is obviously sort of the flag bearer. Again, I think I mentioned this last week. You had the shakeout below that low, kind of reset the advance, didn't make any net progress for a year about, okay? And just on this, you had huge volume support at the lows. Not much volume buying here, but it did react well to earnings. You see how it's very tight here on the weekly. It's kind of like you have to, what's going on there? So up most weeks, and now it's popping to new highs this week. Again, I'm not saying, is this a breakout and it just runs straight higher? It's possible. It's also possible it pulls back. It's kind of extended here compared to the moving averages. But just seeing some, as opposed to, like I was saying the last few weeks, it's like, okay, it looks good, but it's just kind of overbought into a lot of resistance. What's going to happen? And accelerated higher. So maybe it pulls back or not, but now it's kind of breaking out. And so you can kind of play it off that. Maybe there's a modest pullback or whatnot from here, but it certainly looks good. AVGO, or Broadcom, sorry, AVGO, I always say AVGO, actually looks probably a little bit better than NVIDIA. It's been up, I don't even know, 10, I'm not going to count that out, but 9-10 weeks in a row. Had a little bit of a wobble here on the daily chart on earnings, but again, it just like the market, it just sort of tagged the 25-day line. Now it's moving out to new highs. Even like a service now is, it's off the bottom. It's not sort of the the leader of all leaders or whatever. You can see it had a very tough correction here before and during the market decline, and maybe it needs to rest for a year or two. It certainly had a huge run the last decade, really. But the stock obviously reacted very well to earnings, huge volume, and you can just see how tight it's been in here the last 5 or 6 weeks with the market. And after a little bit of a shakeout to the 10-week line, or the 50-day line, I guess right here, boom. Okay, and I guess the 200-day line too. It's starting to perk up. Maybe this ends up being sort of a shelf that it breaks out from. So, I do find it interesting that some of these big cap indexes, no surprise with the big cap index is doing well, are looking pretty good. Okay, I'm just running through a bunch of other kind of hodgepodge. This is Bitcoin, IBIT. I think it looks the chart looks great. I mean, it's not like you can point to like sales or earnings growth or there's some event coming up. But there's just more and more of this stuff going on. Of course, this is Bitcoin. Stable coins seem to be sort of the popular thing these days in terms of where the money's flowing. So maybe Bitcoin is going to take a back seat. But, it's just the tightness at the bottom, the 40-week line support. It's kind of almost like a base within a base in here. It's all very tight. And I just wonder, I'm not predicting this at all, but I sort of wonder if this is playing possum, where we know Bitcoin can do one of these stupid things where it's up 50% in 2 months. I'm not predicting that's happening at all. For all I know, it tops out here. But I do wonder if this is sort of just a big launching pad, and not that people aren't talking about it, but it's just sort of tightening up, and then when it gets going, it can really move. So I'm still watching that. This one is I'm not touching this like in the letter or anything. This is MicroStrategy, which is almost like a levered Bitcoin play at this point. They basically own Bitcoin. But again, this stock, you can just see it has this history of having these wild swing. I mean, this is like a 50% decline. So it just goes wild up and down, up and down. And then when it can move, it can kind of go straight up for a few weeks. Here you have this enormous base. And in the last few weeks, again, I wouldn't say it's been tight. Again, the stock is crazy, but it's holding in there. If you do something with this, I will say keep it small, use a loose leash, because the stock will move around 5 to 10% in a day oftentimes. So we'll see what happens. But I do like the whole Bitcoin crypto space, okay? I have a lot of stocks to get to. CRWV, longer video today. CRWV's had this huge run. This is its first down week as I record this. You can just see on the weekly chart real quick. Okay, so totally normal so far. Here's a 25-day line catching up. I'm not saying that's a magic support level, but if we did kind of sell off here or consolidate, say the market rests here into July 4th next week, it wouldn't surprise me if the 25-day line offers some support. So I am kind of still keeping an eye on this. Of course, I wish I bought it back here or back here. That would have been nice. But just looking at it here, I do think the first pullback will be buyable. It's just a matter of whether that pullback's, a few days or 3 or 4 weeks or something like that. I am encouraged with how volume has dried up so far. So still keeping an eye on it. Just going around there's just from names from all over. This is Next Tracker, which had this huge rush higher. It's a little bit news driven based on what may or may not happen with the tax cut bill or whatever they want to call it. But just on the weekly chart, it's just built this huge long structure. This was clear. There's been some skyscrapers in here, these blue, skyscrapers. And then you have really a nice consolidation here again with the market. The last 5 or 6 weeks, I know the S&P and some of these things nose to new highs, but most stocks, vast majority of them, have just been kind of tight and quiet, which I think is a good thing if we can get out of here, and we're starting to see some of them get up and out. So this one's hitting the 10-week line, kind of an interesting setup there. Copper, which, I've seen some commodities work, not just like oil popping and stuff like that, but, copper has a history of, it can run for a couple months when it gets in gear. And now it's obviously been out of gear for a while. This is Southern Copper, SCCO. Freeport looks kind of similar. We can see this big volume clue and nice pop. Obviously, it's going to be all over the place, but now it's clearly above the moving averages. And, it's not like these things are going to go down for 6 years, 10 years. At some point, they'll turn around. So if that's your idea of a good time, have at it. Life 360, I'm still watching this. I think the weekly chart looks great. Let's see let's see what I can do here. Anyway, we got a little technical malfunction, but weekly chart looks great on, this is LIF, Life 360. I like that they're monetizing their free base. I don't want to give too much away, this free video. They're going to see a nice tight consolidation here above the 10-week line that's rallying. It is a thinner name, not a ton of sponsorship, so you can see it can kind of get tossed around on a daily basis, but looks good. Amer Sports, AS, symbol AS. Again, on the weekly chart, what do you see? 4 or 5 really tight weeks in here after the stock basically doubled from its sort of panic lows to its post-earnings high here and just has stayed really tight. Now it's trying to poke up here, so we'll see if the stock can get out above here. I'm still watching some things can be out of gear a little bit. Dutch Brothers, to me, this is BROS, just got going last November. Obviously, retail and restaurants, it's not where it's at right now. But it had a nice accelerated run higher, got hit with the market, held the 40-week line, and now it's just base building. Maybe it needs another 3 months. Maybe the group is going to be out of favor. Maybe it goes to zero. I don't know. But to me, it's a nice setup. It's a great cookie cutter story. A little bit of higher volume this week, which I think is a small clue. Not that I'm going too much on that. And, I'm not saying you buy everything as a breakout, but if the stock can start to show some real upside with some power, it would be interesting. I'm not in a rush to get in ahead of that, okay? VEEV, I think I mentioned this last week, but again, you just have this 4 weeks of just very, very tight action. Looks like a change in character after a couple years of, the company's been doing well. You can see the earnings line's been kind of gliding higher. Looks like it should accelerate. The stock is starting to reflect that. Looks pretty good. SE, this is C Limited. You're not in the earliest stage of the advance, but nice pullback to the 10-week line here, and it is responding, starting to bounce. You'd like to see a little bit more of a bounce there. Coupang is another one that looks even better right now. Coupang hasn't had the big run like SE had, for better or worse. We kind of had this double bottom base. It broke out and had it depends how you want to define it, but sometimes we call this double skyscrapers, where you have 2 big weeks in a row of buying, and then again you had a few weeks of tightness, and now it's sort of resuming higher. That looks good. Keeping an eye on Rubrik. I still think cybersecurity looks good. This one had it had a huge run. So post earnings sell off, no big deal. Then it had a big convertible share offering that hit the stock. So it's been consolidating here, hasn't done anything wrong. You'd like to see it, I don't know, just kind of resume higher. It did have some volume on the way down, so maybe that caps the stock a little bit longer. But if the stock can start to resume and the relative performance resumes, that would be good. And I'm still keeping an eye on, speaking of resuming, so this is 2 off the bottom names. This is Wingstop, which we've talked about. Big persistent run, not just bouncing, but above all the moving averages, 200-day, 25, and 50. Now it's pulled back, had some volume, certainly has earned the right to rest. And it's been, I don't know, what's this, the second week, third week? Yeah, third week of consolidation in here. Lower volume the last couple of weeks, or below average volume, I should say. So maybe it's done for, maybe it's hits overhead or whatever, but I'd be kind of interested if the stock can resume. The other one that's in the similar boat is Transmedics. Got hit last week. I think there was a little bit of news, but again, above all the moving averages. You can just see on the weekly chart, big comeback, and now a big sharp decline and support near the 10-week line. So you're going to see there's a variety of names from a bunch of different groups. Not that all the groups are, not that everything's working, it's not, but there's a bunch of different names that, still have setups that are extending higher. Chip stocks look good. There's some, even some retail that hasn't been in favor looks good. Okay. So we'll see how it goes from here. I mean, I'm pretty, bigger picture is kind of where my bigger conviction is. And the reason I mentioned something like an index fund or whatever is just the odds are pretty good that, when looking out 6 or 12 months, the market will be nicely higher. Okay. Now, obviously, we're trying to find some leaders that can do better than the market, but there's nothing wrong with making money one way or the other. It's a little bit hot and heavy, short term, very short term here. A lot of times breakouts in the market it's too obvious. Everyone's watching them. Oh, we broke out. It's a new all-time high. So sometimes you get some shaking and baking. But again, even if we do short term, unless we see some real, 700, just some big, 5% decline, that's really abnormal and hits a lot of stocks. At this point, there's still a lot of daylight here for the NASDAQ and the S&P. And even when you're looking at, say, like the mid-cap index, not that you want it to come down, but there's still, let me just check this. Track price. Well, I can't get it in there, but it's probably about 4% daylight there for the index to wiggle around. So overall bullish. This week has certainly been what you wanted to see. Come in on bad news, react well to the news, pretty much up every day, and a lot of individual stocks, not just like Apple, Google. Actually, those don't look good. Not just a couple mega cap stocks, but a lot of stocks joining the party, firming up, lifting to new highs, looking good. So if you've been following along, it's time to take another step or two into the market's waters. And obviously, if you have a lot of stocks, you also want to weed your garden. If some things aren't working, set your stop in there, give them a chance to work, but don't let them, turn into big losers while focusing more on the winning stocks going forward. Okay, that's all the time I have for today. Thanks for listening. Be sure to come by again next week for another Cabot Weekly Review.